everyone. How's it going? Norm Schriever here with John Coleman on the Tea and Mortgage podcast, and it's actually episode number 33, John.
Good morning, everyone. Yes, the same age as Jesus when he passed, by the way. There you go. 33 years and we're still doing this. So um, that's all down to you, my friend. All down to you. And now you have me doing it on video every time. So
Yeah.
I've come a long way. Personal growth has happened on the back of your little nudging along the way. So
Look at you.
here
You're
we are.
filming videos. You're
Yeah.
giving Jesus references in the podcast. You've really evolved as a human being, huh?
I don't know. Yeah, well, you might edit that piece out, by the way.
No, we're
Or maybe
good. We're
not.
good.
Oh, we're good. We're good. So,
But absolutely, John. So yeah, you're right. Episode number 33. We're getting along with the Tea and Mortgage podcast, and everyone's been great with subscribing, with watching, and it's all about just giving awesome information of value to anyone out there who's thinking about getting a mortgage or a property in Ireland. And today we have a really good topic. Shout out to our friend Taryn, of course, who's feeding us these wonderful topics that people are looking for. And today we're going to talk about the difference between first-time buyers and second-time buyers specifically.
yeah, absolutely. There's a lot to go through here, and there's um, as a first-time buyer, I suppose, to give its formal definition and how the banks view it most importantly. A first-time buyer is someone who hasn't bought a home. Sorry, are actually going to who hasn't. It's not owned, but who hasn't bought or got a mortgage on a home previously in anywhere in the world. Okay, so
Mm-hmm.
if you've had a mortgage on a property in Ireland or somewhere else in the world, the bank will deem you to be a second time buyer. And that's really, really important. Now, people will always then ask, well, how will the bank know if I had a property in another country? Well, it depends on if they do a credit report check. If they do a credit report check, that loan that you would have had will come up. So in some instances, they actually wouldn't know. But if
Mm-hmm.
they require a credit report check, then they will absolutely see that fact.
That's really interesting. I'm already learning something. No joke. And so at first-time buyer, it's not like, okay, you're buying your first property and it's a clear cut definition. It's if you've bought a property in another country and you've moved to Ireland, then you can't be a first-time buyer in Ireland, but more specifically, if you've received a mortgage before, because there's some people that pay cash for homes, or maybe they have a family member that was lending to them, or lender, or owner financing, or all these creative things, and so those wouldn't
Yeah,
fall into the definition of a
no,
first-time buyer.
they wouldn't. And if someone inherited a property, right, they wouldn't be a first time. They'd still be a first time buyer. They just have a
Yeah,
property, but
yeah,
they've never actually bought a home from basically. It's
and
really
got a
it
mortgage.
really is a mortgage, basically.
Yeah, absolutely. Well, yeah, and that's what we're talking about, of course, is from the viewpoint of the bank lending great products, lending products for first time buyers. So, of course, this is all through the lens of the mortgage bank. So, how about a
Yeah.
second time buyer? What's your
Well,
definition of that?
the definition of second time buyer is anyone who's not a first time buyer. Really, I know that sounds quite simple, really, because it would mean that you um, have had bought a property or had a mortgage on a property previously. Doesn't mean you if like just because you might have sold it and have no properties currently, you're still a second time buyer because you've been down the road before, you have owned it and you have had a mortgage on a property. So basically, yeah, anyone who's not a first time buyer, as simple as that sounds.
Yeah, great. And now that we've defined first time, second time buyers, let's talk a little about the nuances or the subtleties of how the mortgage lending is different for them. Like, what are the differences in terms of financing and financials?
Well, yeah, there's two major differences as things stand, right? Firstly, from a grant point of view, as in money that's available, there's none available for a second time buyer in terms of help to buy schemes, first home schemes, affordable housing schemes. So none that's available. The only one that might be available to a second time buyer, if they were buying a vacant home, there's grants available for anyone that had sort of a vacant property for over 2 years. There's kind of refinance grants available, and that
Hmm.
comes after the fact. It's not really part of the mortgage at all, but it's the only thing that's currently available for second time buyers. The other thing is then the treatment of the banks by the banks, okay? Because this, as you know, the central bank have different rules for first time buyers and second time buyers. Now, personally, I'm not in favor of these rules. I don't think they're fair against the second time buyer, but I'm not going to argue with the central bank on this. They make the rules, and they are looking to protect their core ethos is to protect the borrower. So there may be strong reasons for this, but in relation to income, the central bank rules are basically four times your salary, but for a second
Hmm.
time buyer, it's only three and a half times. Okay,
Mm.
so
Okay.
there is a significant difference in terms of lending power for the second time buyer. Okay. Um, the only case where those rules don't come into effect is if you are moving from one bank to another. Okay. So if you were switching for a rate, the multiple of rate of income doesn't come into account. But we're really talking about people who are looking to buy their second property. So in this case, the three and a half times it does is the key piece of information there. Again, a bit like first time buyers, there are instances where the banks can give exceptions, but it's not that often, right? It's not something. It's not that they're not bankable in truth. So
Yeah.
a bit like what I would call the first time buyer knowing where they stand or the roadmap. A second time buyer, even though you've been down the road, having done this, a roadmap is very important. Knowing where you stand, knowing because if you're trying to, and I don't know whether you're going to ask this later on, but I'll cover it right now. If you have a home at the moment and you're trying to and buy a second property, okay, there's a lot of moving parts, and a lot of
Yeah.
people forget that they may have a house that's worth say 400,000 and they only owe 300,000, and in their head they have 100,000 euros sitting in their back pocket, okay, but they don't have access to that 100,000 until their property is sold.
Yeah.
Okay. And then they're trying to buy a second property. And this is the point that a lot of people forget. And say they're upgrading, they're buying a house for 500. Well, now they need 50,000 as a deposit. Okay.
Hmm.
But they need that deposit within 6 weeks of buying the property. Okay. And they mightn't have it. So they have to kind of go beg, borrow, or steal off of someone to allow them to pay a deposit. While
Or come to you for a bridging loan, right?
yeah, it's not even that those bridging loans are very they're not the cheapest form of finance, and it's
Yeah.
not wouldn't be my absolute go-to,
Yeah.
and they're more for a different set of circumstances in truth than the one you just described there. So but the one piece of advice I give to people who are trying to buy and sell at the same time is very much it's a human psychology piece of advice. I always would advise if there's a house you really like, right, and you're going to have to sell your own house. I would be telling because put yourself in the mind of the seller. The seller is always going to want to sell to a first time buyer in the main because
Hmm.
there's no
Hmm.
other property that needs to be sold. Okay.
Mm.
However, if you say to the selling agent, whoever, whichever house you buy, you're going to want the selling agent to sell your house so you can manage the process.
Mm.
Suddenly, it sounds like a bribe. It's not a bribe, but suddenly you have a selling agent with a vested interest in you being successful. Okay.
Yeah.
It
Yeah.
still doesn't overcome the fact that you may not be the preferred buyer from the seller's point of view, but
Hmm.
you've a guy who has a vested interest in you get in the house because he's now then got another house to sell. Okay, so um, I always give that advice out, and it certainly has worked.
And
Not
that's
that
really interesting too, because like you're saying, sellers would prefer to sell to a first-time buyer because of these mechanics. In the United States, it's quite the opposite. First-time buyers their loans are a little trickier. Sometimes they have less money to put down. Sometimes they get freaked out during, well, they always get freaked out during the process. And they're a pain in the you know what when it comes to managing expectations and timelines and emotions. And
And
there's just
that's
a lot
all
more that could go
understandable.
wrong.
I
Yeah.
get that. I'm well used to the I think I always tell the story that I when I bought my first property, I got sick. I think I told you
Yeah.
this before
Yeah.
with the thought of
Yeah.
what I was doing. So, and I was a mortgage broker for a year at that point. So I fully get the concept of outside your comfort zone. This is one of the biggest things you're going to do in your life. So we deal with those emotions as they come, and we kind of you kind of have to factor them in. Even if the second time buyer, it's still the second time they're doing it in the main. So those emotions don't go away. It's still a huge deal. And in
Yeah.
truth, when you add buying and selling at the same time into the mix, you're suddenly now dealing with a kind of a lot of moving parts. And when there's a lot of moving parts, more
Yeah.
things can go wrong, or more
Yeah.
there can be more delays in different things. So that all adds to the stress level.
No,
So
that's incredibly exponentially more complex, right? When you need to
yeah,
sell to tap into that equity. What about like when second time buyers are able to get their sell and get their mortgage loan on the next property? How do their rates, their terms, like is the
well,
lending a little better than the first time?
not necessarily. The rates are the rates, and the rate they're not really differentiated between first time buyers and second time buyers. So that there's no rate differential per se. If you're bringing more money to the deal as a second time buyer, then the rates can differ on what they call on a loan to value basis. What that actually means, Norma, so if the cost price is for easy maths is say 500,000, if you're borrowing 450, the loan to value there is 90%. Okay, so
Yep.
that's the 10%. However, if suddenly you actually at that 500,000 only have to borrow 400,000, you're able because you've got equity in your house that you're putting or you've saved extra money throughout the years. Then you're basically the loan to value on this property is 80%, and you would get a better option of a rate. There's an 80% rate versus a 90% rate. So the rates don't differ because as a first time buyer, if you were bringing 20% to the deal, you would get that rate. But you're more likely to have 20% available if you're selling a property, basically.
Hmm.
Does that make
Interesting.
sense?
Makes a lot of sense. Yeah, of course. Um, and now we touched on it. You mentioned it before, the difference in managing emotions, expectations, excuse me, stuff like that between a first time and second time buyer. What have you seen as a mortgage broker? Um,
Are you
you
going
know,
to put me
bec
on the spot here, by the
I'm
way?
going to put you on the spot. The difference, the behavior, the psychology, the freakouts, between first and second time.
I'm gonna. There's no massive because we believe fully in and strongly in communication,
Yeah.
giving good news and bad news, and in managing expectations. Um, Now, obviously, there are some people who will send you 10 messages a day, right? When you're waiting for an update, when we're waiting for an update back from the bank and chasing any news, and we get that, but I would always, like, we always communicate on a daily basis. Obviously, if someone's sending 10 messages, it becomes slightly frustrating for us because well, they're taking time away from us from doing our job. But I get it, right? I don't know if there's any massive. Now, I'd preface this by saying 90% of the people we help would be first time buyers. So
Mm.
in the main,
Is it really that high?
yeah, no, and
Wow.
that's who I like helping. Okay, um, it's the business process we put in place from a business point of view. It would be much better if we're helping people with houses because it's quicker business. But I love the sort of educational piece of the journey. You talk to them today, you get them ready for the next 6 months. They then go start looking for housing. It can be a 2 year journey, right?
Hmm.
Before they actually have the keys to their home. Um, so that's so from our own business point of view, that's the model that we've built and that we end up. Obviously, we won't we help second time buyers, and I'm going to touch on a little other piece of a second time buyer where they're buying a new home or they're trying to buy an investment. There's a little bit of a nuance there that I'd like
Hmm.
to discuss there. But no, in the main, and I'm not being politically correct here, right? I don't know. I can't say anyone ever really freaks out. The odd time you might get people who get peeved with the banks not moving or last minute
Yeah.
solicitors not moving at the speed that they want, or and some people get unlucky. Like you could be buying a home and then the people that they're buying the home from can suddenly pull the plug, and that's very disappointing. And when you've
Yeah.
agreed to buy a house, but that and that happens, right? But um, it's not something that you would be you would make allowances for that all the
Yeah,
time.
yeah,
So
and it's not there. It's that's a natural reaction to that kind of change or disappointment or roadblock in the process.
you
That's not a freak out.
you might find second time buyers less um, technology based, whereby suddenly
Mm, mm,
uploading paperwork can be
mm,
more challenging, right? So from that point of view, obviously we need to hold our hands in a greater depth to show them how to get it done, and they're kind of going, well, when I got my first mortgage, it was we delivered all our paperwork in hand, and those days are gone, thank God.
hmm, hmm.
But obviously people need to have their own ways of doing things or have done things in the past, and we need to make sure that they can work with sort of
Interesting.
new technology and new systems.
Yeah. So here's a good
Well, now,
question.
no more political questions here, no. Okay.
No more putting you on the spot to
Yeah,
throw your clients under the bus. But
yeah, no.
here's
I
an
think
interesting
I
one.
managed. I handled that well. I was honest, and well, in truth, I think my team were very good. That they keep me sane, so they keep everything, all the communication flowing. So it's rare that we hear anything that goes wrong.
Yeah, yeah,
Obviously,
yeah.
everyone's human, so mistakes do happen, and we just have to make sure they get managed in the quickest time frame possible when they do.
No, and you guys do a great job. Like I know it's very genuine. You love helping first time buyers and you love the education and you over communicate. So it works. But now I know it might get tricky. This is an obscure question, but the whole designation, are you a first time buyer? Are you a second time buyer? There's a lot of difference when it comes to, grants and government help and how
Yeah.
much you put down and all that. What if there's a married couple and one is, one isn't? What happens then?
Great question. It's a unit. It's viewed on a unit basis, so it's an application. So by by default, if one of them hasn't, if one of them, sorry, if one of them isn't a first time buyer as a joint application, they're not first time buyers, right? So brilliant question, and it's something we do get asked. Um, in the main, right, just to kind of summarize the difference, in the main the grants are only really affected for new properties. Okay, so that's where that has its issue, where people want to use the help to buy or the first home scheme. So that, and then the second real issue then is on the amount the bank will lend. It's
Hmm.
it's a different multiple. So they're the two key pieces of information. But obviously, we we will present what needs in terms of how do I say this? Um, the information that the banks are going to look for will dictate, in effect,
Yeah.
how the banks view them. Right? I've had occasions in the past where someone nearly came back and told me afterwards that they had a house, but it was 20 years ago and it wasn't on the credit report. So they were deemed to be a first time buyer by the
Yeah.
bank, and nobody ever knew any different. And in truth, it had no impact. Do you understand? Like
Yeah.
it's not
Yeah.
like
Yeah. Yeah.
they in effect, if you want to view it in these terms, they gamed the system a little bit. So and it was only afterwards that I found out, so I could not I could do at that stage.
Yeah.
But truth, it was really it. Listen, I'm not saying people don't try to misrepresent themselves.
Hmm. Yeah. Yeah.
Uh,
Yeah.
that's
Let me
true.
ask you this, because that number is still shocking to me that you help 90% first time buyers. And
Yeah.
do you foresee in the future, 5, 10 years, that dynamic changes a lot? I mean, is it tied to the trends and the market in Ireland there, where it's the majority first time buyers and people just don't move and they keep their home a long time, or is it just your business
Okay,
or
yeah, I think because obviously I've got friends in the business, and from a business generation point of view, in terms of just I'm not talking in terms of mortgages here or in terms of cash flow. If I was doing more business, say refinancing business, whereby you're moving people from one bank to another from a rate point of view, two or three downs, well, that there would be a greater value in that. Um, but I've always like I don't like ever. I don't. I think you know me well enough to know I don't view myself as a salesperson, right? So
no?
when you get into that conversation with people, say after 3 or 5 years, my instinct is I'm not trying to persuade them to look at it means more business, but I'm not trying to persuade them to move to
Yeah, yeah,
a
yeah,
different bank just because it helps us. Like a mortgage is a painful process, right?
yeah, yeah,
And the paperwork is pretty onerous. So unless there's an absolute significant benefit to moving, I'm kind of reluctant to actually recommend that because I remember during the rates. I don't know when if you remember 2 years ago, I think, when after COVID, when the rates were going through the roof in Europe, right? I refused to do business for refinancing people because I knew by the time that it was taking so long, and by the time it came to the fact that they'd be ready to do it, the rates could have gone against them.
yeah,
And they'd
yeah,
have been better off staying where they were with the bank. So I kind of said, listen, I can't guarantee that I'd make this is going to make sense for you. I
yeah.
would
And
direct.
everything being cyclical, we knew that rates were going to come down eventually, even though it didn't seem like it. So you were probably like, wait it out a couple years, and then we could refinance.
I understand where people were coming from, and it was just I didn't want the pressure, right, of having to be responsible for the bank's speed in this at that moment, right? And I was turning away business, but telling them to go direct, right? And saying, listen, if you go direct, you may. So then
Oh, okay.
I was giving them the best advice. I was just turning away the business because I didn't want to be the person who
Yeah, yeah,
disappointed them because of that. So my whole business ethos has been all around not a sales process, but an education process,
yeah,
whereby
yeah,
we're literally in the business of helping people buy homes, right? Um, so obviously, if people then want to buy a second home, it just there's less of them basically, right?
yeah,
Uh,
yeah, yeah.
so obviously, we'll have by default well, if we keep going, we're going. Then the volume of our switching business, shall we call it, will go up. But as a percentage, I don't see it. I don't see it
It's going to be
increasing.
pretty the same. Yeah.
I would say it's the
So
same because ultimately, we're here to help people buy homes, right?
yeah,
Rather than rates. But
yep,
obviously, from a rate point of view, we're here to make sure they get the best possible rate at the point when they're buying a home, and then we're here as an advisory service to talk them through where the world is at. Does it make sense to move? If it does, then we'll certainly facilitate it. But it's not something we want to actively look like we're um,
hmm,
chasing. Does that make sense?
absolutely,
Probably
absolutely.
not
And so
what my
he,
competitors do, by the way. Some of my competitors would be
yeah,
kind of viewing as an opportunity to move banks and purely from a generation of income point of view.
yeah,
And all my systems are built around um, helping the first time buyers. The whole automations, the whole technology is built that way. So we've gone off
yeah.
topic here, by the way. This is your fault.
No, it's always my fault but it's interesting to me, right? And so I have another fun question, and then
Okay.
we probably covered it well in this podcast episode. But you mentioned that getting a mortgage is painful.
Yeah.
So which is more painful and less desirable, going to the dentist for a root canal or the mortgage process? What would you say?
Oh, they're both painful. Okay. And I'm going to sort of pivot a little bit here to go that just in relation to like the biggest challenge the first time buyer would have, right? I'm not going to talk about people's dental treatment, but that's a painful process, but that's over quick, right? That's no, in theory, that's a one visit, within a day you're back to normal. The mortgage process is a long, drawn out process.
You're not back to normal quickly with the mortgage
So
process, huh?
yeah, no, that certainly takes time. But one difference, and getting serious for a moment, between where the first time buyer and second time buyer differentiate. You've often heard me talk about what for first time buyer the banks need to, or the people need to do is demonstrate an ability to repay. Okay, so
Hmm.
that's via your monthly savings, your rent, or whatever. Well, as a second time buyer, you're already paying a mortgage. Okay,
Yeah, yeah,
so that's a significant piece of that boxed up. Now, if suddenly your mortgages jump, if you're looking to borrow another 200,000, you still have that element to take care of. The extra, you need to be able to show the extra amount. But you have a very clean mortgage repayment, okay? And that certainly
hmm,
makes that piece of the jigsaw, or that piece of the of,
yeah,
of the application easier to show. As a second time buyer, there's I do think two things I do want to kind of discuss. If you're buying a second time buyer can do one or two things. They can be buying a house and selling a house, okay, and that comes with its um, logistical challenges, and having the
yeah.
deposit available is important, okay. But then there's the other type of second time buyer who who want to keep their existing home and buy a new
Mm.
home, okay. Now, from a rate
And
point
would
of
they
view,
keep that for usually a rental property, an investment
yes,
property or
yeah,
something?
yeah,
Okay.
yeah. But they don't tend to tell the bank that they had their first mortgage with that they've done that, because then the bank will up their rates basically, right?
Mm.
So they tend to go to a different bank and buy their new home with it. So they're getting a home loan rate with one and a home loan rate with the other. That's you know, I personally think the bank could turn a blind eye to that. In truth, if and I think Donald Trump's was trying to fire one of their central bank people for having two home loan mortgages. By the way, was using all sorts of. But anyway, I digress there a little. But in truth, when you're buying a second home and you want to keep a property, but you want to still get a home loan, right? You need to be buying it as a home by with the new bank, basically, right?
Yeah.
And
Interesting. Yeah.
that obviously will be something that we would discuss in on a one-to-one basis with anyone who's looking to do that.
Yeah. Interesting. Well, some great information from first time buyers, second time buyers, the differences, what they need to look for, and what the process looks for. And again, shout out to our awesome friend and team member Taryn for this information,
Yeah, no, no,
this
absolutely.
topic that she suggested. Yeah.
No, because you and I, our brains can get flogged as to what's of value to people. So yeah, and it's always important to make sure that we're bringing information that has a value. And listen, I have conversations with second time buyers on an ongoing basis. Um, I, I hope I haven't turned them off talking to me just because I said 90% of our business is first time buyers. I've been doing this for over 20 years, so I have plenty of experience
Of
in
course.
guiding through those little, and there are nuances that need to be thought about, right? And
Yeah.
the devil will be in the detail. The first
Yeah.
time buyer is much cleaner, it's much simpler, and there's no other moving parts. Second time buyer, whether you they want to keep your existing property and buy a new home, or whether you're trying to buy and sell, again, I go back to the education piece. Know what you're getting. Because sometimes
Yeah.
second time buyers can think, I've done this before. I survived. I'll be okay again. There are just a few different.
Or they think that the process is exactly the same, when there was less technology, less checkpoints back in the day, or
And no,
maybe
no, no.
they,
They
yeah,
might
yeah,
fully understand that they won't qualify for as much now. In their salaries may have gone up, but they may still have oh my, I can get four times my salary. Well,
yeah,
that's not the case. So again, it's when you're looking to buy a new place, um, you need to know where the banks are going to view you before you just because people can get sort of like the mortgage is irrelevant. Like the mortgage is only a piece of it's a vehicle. It's the home. So people understandably can. I have people who suddenly put their houses on the market, right, and they haven't talked to the bank yet, whether it be through me or anyone, and suddenly they're wasting their own time if they don't know where they're going to stand, you know. And
yeah,
the older you get, Norm, the more you value time. I don't know about you, but I'm very precious about that, so that I don't like
Yeah.
wasting any of them. So maybe because we're closer to the end date, that
Yeah, yeah. We're that finish line's in sight.
yeah,
There's no time to
I know when I
waste.
was in my 20s, time was a concept that didn't really mean anything to me. It was just I'm here to enjoy myself every moment of every day, you know. So
Yeah,
um,
yeah.
now
Well, and I'm way older than you, so you have a good head
oh,
on your
you
shoulder
darling, you
for being a
darling.
young pup. Speaking of which, I actually thought of this question while you were talking. You're going to start running into a significant segment of your business of parents that are your peers that you got a first time mortgage for, and then their children are turning 20s and 30s and are looking for a more, maybe that started already, huh?
There's been one or two, yeah, very young parents. I'm going to say that, by the way. Okay,
Yeah,
so
yeah, yeah.
yeah, no, it has happened once or twice. Not, but yeah, I would foresee that happening in the next 5 years, perhaps, if hopefully
Five,
I'm
ten
still,
years it's going to be an
yeah,
explosion of
I
that.
will.
Yeah.
But at this point, they won't want to talk to an old fogey like me. There'll be some young whippersnapper who knows everything, who's been in the business long enough, but that can still speak to people that are in their
No, there'll
late
be the
30s.
AI John Coleman, of course, who's a hologram, whatever you call it, that appears in their living room, and who
Well,
knows? Yeah.
there might be something invented to keep us young forever. Now, maybe that's the next development in life. But we keep hoping and we keep doing our best in the meantime. But listen, buying a home is always it's always a journey, and you'll always feel out of your depth no matter what age you are, whether it's
Yeah.
first time buyer or second time buyer, if you don't really educate yourself properly. And I know I keep
Yeah.
dropping that message home, but that really is the key point.
Fantastic.
No
Well,
matter how old we are in 5 or 10 years time, the
yeah,
messages,
hopefully we're still around. Hopefully
whether
we're
it be
still
an
around.
AI John Coleman or whether it be somebody else, knowing the different nuances is what's going to be key. You
Yeah.
know.
Fantastic. Well, great information for first time buyers, second time buyers, anyone just looking at the mortgage process. So, John, thanks again. TN Mortgage Podcast, episode number 33. And we're all about just educating and bringing great information. So, thank you.
No, fantastic. No, thanks a million, and thanks for everyone for listening. Hope you all enjoyed that and got some good information. And we'll hopefully have some new and exciting topics to talk to in the very near future. Okay.
Take care, everyone.
Cheers.